2019 was a year of no normalization, when everybody expected central banks to improve the balance sheet, reduce the balance sheet, and increase rates gradually. What we ended up seeing was exactly the opposite. Much more aggressive policies towards accommodation. Why was that? Because central banks feared a very aggressive reaction in asset prices and markets. And what we saw in 2018 from October to December, with a very modest increase in interest rates and a very modest reduction in the central bank balance sheet and the United States Federal Reserve balance sheet, ended up being a completely different stance in terms of monetary policy. So what can we expect from 2020? From 2020, we can expect quite a bit of the same. The risks that we need to take into account are the following. The very first one is that what has happened in 2019 is an improvement in asset prices, a dramatic improvement of asset prices based on the surprise of accommodative monetary policy and the fact that the central bank's balance sheet have risen to all-time highs. That was the positive surprise for asset prices. But now what markets expect is a continuation of that. And it's not the same to see markets rise dramatically because there's been a U-turn in monetary policy than to see markets rise further because everybody expects the policies to remain the same. So we need to be aware of that. We also need to be aware of the possibility of a gradual rise in inflation. A gradual rise in inflation that starts to make bond yields rise, as well as spreads rise between high yield and investment grade, generating nominal and real losses in fixed income portfolios. So gradual increase in inflation is a big risk. An important risk as well is too much of an expectation of continued monetary policy. The other big risk is that the market has been moving positioning towards emerging markets, towards commodities, towards everything that is short dollar, everything that is a bet on dollar weakening. And that may actually not happen. And we need to be very aware of that if the expectations of moderate but improved growth in 2020 don't happen, which is likely, particularly in the Eurozone, particularly in some Latin American countries, also in India, and in some of the more, let's say, optimistic expectations seen for China. But also because what we can see is that there is a rising demand for dollars because of the wall of maturities coming up from emerging markets in US dollar-based debt. Therefore, we need to be at least aware of those risks and monitor the year so that at least throughout the months that happen, we start to see whether there is a change in the earnings profile of the market. Second, whether there is a real change and a lasting change in macroeconomic trends. And third, whether this change of view towards the safer asset, the US dollar, is actually happening. Those three risks will dictate what will happen into the second part of the year. We start from hope, we move into excessive optimism, and we might get, again, quite a bit of concern about the reality. Because the reality is that it is very difficult that we see an improved growth, improved productivity, and money velocity growing, capital expenditure rising in an environment in which the policies, both at the fiscal and the monetary level, are exactly the same as the ones that we have seen in the last 8 years. Things are not going to change dramatically. So let's pay attention to that two-part process for 2020.